Hey traders, welcome back to this week's weekly Forex forecast. We've got a big week coming up next week because we've got 3 interest rate decisions out of Canada, out of the US. We've got FOMC on Wednesday and the Bank of Canada on Wednesday as well. And then on Thursday, we've got the ECB. So next week is going to be a huge week. And really, January has been quite a tricky month for trading because not only have we had quite a lot of interest rate decisions, but we've also had truncated weeks, quite a lot of bank holidays, 4-day weeks instead of 5-day weeks. I mean, this has been going on really since Christmas. So we are coming into the tail end of this into January and kind of culminating with these 3 interest rate decisions next week. And as you can see, the US dollar last week, big down week, sitting at the major breakout high of the 107.35. And it really has a decision to make. Does it hold here and then it starts the next leg back up to the highs, which at the moment is the base case that I'll be going with? Or do we start to see a major breakdown and a reversal after a failure? And the bulls who have got involved here, they liquidate their positions and this causes a bigger sell-off down below the 107.35. So next week is certainly going to be a big week. It's going to give some direction to the markets. And we also have the unexpected catalysts of the new Trump presidency. So coming out talking about wanting lower interest rates. And this was one of the reasons why the dollar, in fact, the primary reason why the dollar got hammered last week back down to the 107.35. So in today's video, I'm going to show you exactly the pairs that I'm going to be looking at primarily next week and also the setups that I'll be looking at for FOMC and the ECB next week. Okay, so having a look at the portfolio selection for next week, and one of the things that stands out is the Swiss franc short theme. It is my favorite short going into next week, and last week we saw the weakness in the dollar, but we didn't see the flows coming out of the dollar into the yen as one might expect, because usually, especially recently, as money comes out of the yen, goes into the dollar, comes out of the dollar, goes into the yen. But last week, we saw the money coming out of the dollar on the Trump comments, and it started to go into the EU majors. We saw a bump up in the pound, bump up in the euro, and also even in the Australian dollar, New Zealand dollar. Now, we also had comments around crude oil this week in the Canadian dollar. So last week was really, things were just kind of shaking up a little bit. Now, coming into this week, aside from Swiss franc shorts, I am going to be looking at euro longs as it sits really is the #1 long theme heading into next week, followed by US dollar longs and also Japanese yen longs. Now, last week we saw the Bank of Japan raising interest rates, didn't really result in much of a market impact. In fact, the yen didn't even manage to hold the initial rally. It started to actually weaken. So coming into next week, we're faced with, okay, well, really, we're still looking at the Japanese yen to the long side and the dollar and the euro, but we've got an interest rate decision out of the ECB, out of FOMC, and also, out of the Bank of Canada. So for that reason, I'm taking the Canadian dollar pairs off my watch list this week because I really want to see, if we're going to be involved in euro pairs and the US dollar, these are going to be affected by FOMC, ECB. We don't really need another pair in there with an interest rate decision because anything can happen on interest rate decision. They cut rates as expected, and then they say no more interest rates are coming, and you see the Canadian dollar bouncing, right? So there's always an element of unpredictability when you have these news events, and that's why usually I will trade after them or before them, be involved beforehand and then let the event pass and then start to trade after them. And we have it right in the middle of the week on Wednesday with the Bank of Canada and FOMC. So it does give us quite a nice setup, pre-FOMC, and then we can look at the stuff post-FOMC. So the second short theme I'm going to be looking at next week is the New Zealand dollar. And then after that, the pound. The pound has, a little bit of resurgence from the dollar weakness, but it's still really, relatively speaking, something we should be looking at to the short side. So any kind of moves higher, I'll be looking to fade the pound. So the pairs I'm going to be looking at this week, and I'm going to be focusing primarily on my watch list for next week, are Euro Swiss franc to the upside. A really nice technical breakout. Was looking at it with members throughout the week. I didn't want to short Euro franc because of this, and I think we're going to start to accelerate in Euro franc now to the upside. So Euro franc to the long side, I'm looking at buying opportunities only. Euro New Zealand to the long side, Euro pound to the long side. We'll also look at US dollar Swiss franc to the upside, look at New Zealand dollar to the downside, pound dollar to the downside. And again, that will be in and around FOMC. And I'll talk to you about how after FOMC, I'll be looking specifically for certain things in those pairs. And then also we can look at the Japanese yen pairs. We did get the rate hike. The money came out of the dollar, didn't go into the yen, went into the EU majors, but still on balance relative to the other currencies, I would favor buying any weakness that materializes next week in the yen pair. So franc yen to the downside, New Zealand yen to the downside. We'll also be looking at pound yen to the downside in today's video, along with, of course, euro dollar, as we look at every single week, crude oil, gold, and silver. Kicking off the watch list then, as always, with crude oil. Now, crude oil is still a buy or do nothing. It wasn't a nice trend. It started to break out, but it's having a breather. And, you know, the Trump administration is going to want to put downward pressure on crude oil prices because this is going to be disinflationary. It allows the central bank to lower interest rates, which is what Trump said last week he wants, and this is why the dollar sold off. And at the same time, you know, it's good for growth. In fact, it can bring in that kind of Goldilocks regime if you've got you know, growth without inflation. So I am still looking to the upside, but we are getting a bit of a correction in crude oil. Going into next week, I can be a buyer or do nothing. Selling crude oil is not an option. We're below the 20 moving average here. And what I'd like to see is, I'd like to see a couple of things. Either we get crude oil coming all the way back down to the 71.88. If we come down to the 71.88, we start to breach the lower bound of the first range here. The first range is telling us where we become oversold and overbought during the week, and then the range resets next weekend. And the gold range, which is just simply a bigger range, shows us where we become extremely overbought and extremely oversold during the week. And this is where I take trades from. This is where I fade momentum. So if we've got a strong market, I'm looking to be a buyer, and we get a sell-off, then I'm looking to step in and trade the other side of that momentum. And those are the exact setups I take post with members in real time throughout the week in GMT members area. So crude oil, I would like to see this coming down to the 71.88. This is where we turn oversold during the week in the buy zone down here. And this is where we start to trade into this area. This is where I start to look. I start to look to the left. Over here, we've got a previous high. So if we come down, we start to lack momentum, and maybe we trade into this and we start to bottom out. This is where I step in. I'll be looking for 1 or 2 day reversal back inside the range. You know, if you breach the lower bound, you can sort of come back halfway. And if you come down, you know, from halfway, you can go to the top of the range. Rarely do you take out the lower bound and then take out the upper bound. It doesn't really happen. You take out the lower bound and kind of bounce midway, or you break out, you know, to the upside, take out the upper bound during the week. So the second thing I'd like to see is if, and this is really a backup plan, you know, if I get involved down here and I buy as we enter this buy zone, and crude oil starts to move against me, and we take out the 69.16, which is the second lower bound next week, this is where I step in and I'd cost average this, because you have roughly a 95% chance the market is pricing that you will not finish the week down below this level. And even if you finish, you know, kind of down here and you're in that kind of 5%, and usually those 5% of times are when you have catalysts. You know, for example, you could very easily see the dollar pairs going to their second upper and lower bounds next week because you've got FOMC. You could see the same with the euro pairs because of ECB, etc. So if we do come down here, this is the second place I'll be looking for 1 or 2 day liquidation or reversal to the upside in crude oil. And the third and final thing is for breakout trading, if that's what you like, and it especially works well in commodities. Forex, much better for fading stuff because it's a less volatile asset class. But commodities, very good for breakouts. If you get a break back above the moving average, look for the moving average to turn up. And very much like you see over here, he breaks above, pulls back. That first test, break above, pull back. That first test is usually the best test, and that's where you get that kind of bull flag set up into the upper bound here. Great profit taking target at 77.31. What works on the downside works on the upside, so this becomes the sell zone. So I can't actually short anything within here, you know, in terms of crude oil. But if I buy it somewhere down here and it takes out the upper bound, I can book my profits, because the only way to exit a long position is to sell it. Okay, so kicking off the Forex universe with the euro pairs, starting with euro franc, and this is the pattern just on the daily chart for now that I was talking about. I was highlighting with members to say, look, I don't really want to short this. There's opportunities, a couple of opportunities here to the short side. But what I noticed was that this market was building higher lows. Every time it started to sell off, it failed to make a low. Sold off, failed to make a low. Sold off, failed to make a low. And now we're getting those shorts liquidating their positions and saying, okay, I don't like the look of this. You got this kind of ascending triangle pattern. You know, when you got a flat top and you start to build high lows, it kind of creates this ascending triangle pattern. And then as shorts cover their positions, you get that kind of move to the upside. And that can be just based on, you know, what Trump was saying last week to weaken the dollar. Euro franc traders who are shorting it say, I don't like the sound of that. the dollar's going to sell off. This is going to bring money into the euro because it's 57% dollar index. They pull their positions and you start to see this moving up. So coming into next week, keep an eye on this pattern because any kind of move down into this buy zone here between these levels is going to be a potential retest of some of these highs. So back to the Euro franc chart, I can either be a buyer of this or do nothing. You can see where the momentum started to come in as the dollar weakened. What I'd like to see is I'd like to see this pull back, breach the 0.94492. And primarily I'm going to be looking at the euro pairs before Wednesday. So I really want to see these opportunities coming in Monday, kind of Tuesday. So by the time FOMC comes around, because don't forget, FOMC is going to affect the euro as well, because the dollar, as I said, is made up of, or the dollar index is made up of a composition of currencies, a basket of currencies. And the number one currency in that basket is the euro, 57% of the dollar index. So as money comes out of the dollar, it flows into the euro as well as, Japanese yen, the pound, etc. So coming into next week, I can either be a buyer or do nothing. Primarily want these before Wednesday's FOMC. However, if they don't really move, I'll show you how you can look at these on kind of ECB day as well. So a bounce into the 0.94492, this is going to be where I'm going to be looking for a 1 or 2 day reversal to the upside. So we kind of enter the buy zone, maybe take out these highs, maybe we test it even deeper and we take out this high or these lows. I'm starting to look, as soon as we enter this buy zone, I'm looking for a couple of things. Are we trading into prior support, prior resistance that can support price? And are we starting to lack momentum? And then I'm looking for those reversal trades to the upside, double bottoms, inverse head and shoulders in this case, etc. The second thing is if I get involved in this area, somewhere in here, and it starts to move against me, and this trade hasn't worked because usually they should work straight away. If we start to move down and we take out the 0.9389, we become extremely oversold during the week. This is the second place. Whether I'm long already or not, I'll be looking for a 1 or 2 day reversal. And the third and final thing, especially as you've got another kind of ascending triangle here on just a lower time frame, and this is the bigger one over here that we just looked at on the daily, and you can see we've got this momentum. So any pullback, you can look for a breach back below the 20 moving average in this case we're looking at now, and a pull up, and it's that first pullback, that break and that pullback into the moving average that often sets up that nice bull flag setup or bear flag setup to the downside. If you're looking at that during the week, profit taking target to the upside is 0.95688. Now, if you get a kind of neutral outcome on FOMC, ECB, what you can do is you can just look for the initial normal trade. Treat it as if nothing has really happened. If you get a bullish outcome from either FOMC or the ECB, then you can look for the breakout trade that we just looked at here. And if you get a very bearish outcome from ECB, I would be looking at filtering that first level and potentially fading the second lower bound. So the three setups that we're looking at actually set up nicely. And for those of you who have watched the channel before, you'll know we always talk about this during interest rate decision weeks, but they set up nicely for a neutral outcome from the lower bound. If you get a bullish outcome, you can look for the rally up, the pullback, and the rally into the upper bound. If you get a bearish outcome for the euro, you can look for a breakdown, a hard sell-off down to the second lower bound, and very often those second lower bounds will hold even if you get a surprise, bearish catalyst in this case in a stronger market. So you can apply that technique or those setups to all of the US dollar and also the ECB pairs next week as well, if you don't get those opportunities before Wednesday and Thursday, which is primarily when I want to be in and out of the euro pairs and the dollar pairs, and then maybe look at the dollar pairs after Wednesday as well. Next is Euro New Zealand. I can be a buyer or do nothing next week. I cannot sell this market. What I want to see primarily is I want to see a pullback and a breach of the 1.8202. This is where this market, which is kind of flagging at the moment, becomes oversold during the week. So if we start to trade in here, and there's a low right there, that would be my first go-to support level that I'd be looking at. We start to turn oversold during the week, we take out a support level, going to be looking right there. Can we start to get momentum to fade? Can we get those reversal patterns? I'm looking for 1 or 2 days to snap back. And that's what happens. Short traders liquidate their positions and it snaps back for a day or two. So looking to capture 1 or 2 days out of 5. That's really the target per asset each week. Obviously not trading every single asset, but any asset I trade, that's what I'm looking to capture. So the second thing I'll be looking at then is, again, if we start to come all the way down, and maybe this only happens on the ECB or FOMC, you start to see Euro New Zealand coming all the way down to the second lower bound, I can still only buy it. I just cannot sell this market at all next week. This is where I'd be looking for a 1 or 2 day reversal from as well. And if I'm long over here, I'd be cost averaging it and trying to cut break even here. and which is what I do pretty much all the time, you know, if we get into this position. And the second thing is, if I'm not already involved from the first lower bounce, so let's say you get a sell-off, you know, on Wednesday or Thursday even, and it takes this level out, and I'm not involved, this is a great initial position because your odds of reversing from here are much higher than they are even from here. And the third and final thing, you can look for that breakout back above the moving average. You know, you get FOMC, ECB, and it causes a stronger euro. You can look for that bull flag setup, first pullback into the moving average. And what I like about this setup is if we do get that reactively, the prior high sits right at the upper bound. So great profit taking target at 1.85497 next week in EurNzd into the upside. Next is Euro Pound. I can either be a buyer or do nothing. Selling this market is not an option for me next week. We've had a very big breakout and we're starting to correct this now. So what I'd like to see in Euro Pound, I'd like to see this pull all the way back, breach the 0.83506. There are two prior highs over here. There's no support levels that we can look at down here. It's pretty much just air. But this would be a pullback and a retest of broken prior highs. So if we do trade into this zone, this is where I'm going to be primarily looking for momentum to start to fade, a retest, a bounce, and I'll be looking for a 1 or 2 day reversal back inside the range for the week. If we were to blast all the way down, which doesn't seem likely because most of the time you're not going to do this, you know, if we've got ECB, perhaps we could because you've got a catalyst then. But for whatever reason, if we do end up coming down to 0.8294, whether I'm already in a position once or not, this would be the second place. I'd be looking to either add or to take a new position because the odds of reversal from down below there are very, very high. It's because you're not usually going to get there. It's very, very abnormal momentum if that happens during the week. And the third and final thing is, as always, you can look for that bull flag setup. Maybe nothing happens and then on FOMC or the ECB, you get the rally and then pulls back, first test of the moving average and move away. And again, you've got the prior high sitting right at the upper bound at 0.8463. So great profit taking target there in Euro Pound next week. And finally in the Euro pairs, we have Euro Dollar. I cover Euro Dollar every single week because many of you like to look at it, but going into next week, it's not a fantastic market to trade. Why? Because we've got that kind of FOMC and then ECB Wednesday, Thursday. So you can get a lot of volatility in this pair. The best trade in Euro Dollar would be to fade it. In other words, if you get momentum to the upside, to sell it, or if you wanted to, although I won't be looking for this, if it sells off, you know, before Wednesday and Thursday, you can buy it because before Wednesday and Thursday, it should hold its range. There shouldn't be much directional movement coming into Euro Dollar before the interest rate decisions. So what I'd like to see is if I am going to get involved in Euro Dollar, it is still going to be to the short side. The overall trend is to the downside, and both the euro and the dollar are relatively slightly stronger than the other markets. So if we do get, and this won't be the first asset I look at, but if we do get a breach next week of the 1.0608, especially Monday or Tuesday, and we take out this high, that's a really nice high there for resistance. So you got that confluence there of going into the sell zone, and then you take out support, and this is where you can find these markets really starting to reverse with a high degree of probability. So that's what I'm going to be looking at kind of Monday into Wednesday in Euro Dollar if the opportunity arises. If it blasts all the way through, and again, it probably would do this only on, you know, FOMC or ECB. But if you find this market coming all the way up to here after you get one of those catalysts at the 1.0723, this would be the second place I would consider stepping in for a short position. Because again, the odds of a reversal from above here are very, very high next week, even if you have a catalyst. And the third and final thing is, as always, and this would probably be best left till after at least FOMC, probably ECB as well. But you see this market doing nothing into Wednesday, Thursday, and then you get the sell-off and you just get that immediate kind of momentum move, you know, from the interest rate decision. And then what happens is this kind of pulls back into the moving average and sells off down to the profit taking target at the 1.0379. Again, made more difficult next week by the fact you're getting after FOMC and then suddenly the ECB comes out and the opposite happens, right? That's the difficulty of trading euro dollar next week. Okay, so moving on to the dollar pairs, starting with US dollar Swiss franc, very much like the euro pairs. I'd like to be in and out of these before Wednesday and Thursday, ideally. If they don't move before Wednesday and Thursday, I'll look at them after the interest rate decisions. What I'd like to see is I'd like to see US dollar Swiss franc coming down, taking out the 0.8977. There's no close support levels here. So this is not ideal because this is quite far down, almost at the second lower bound. You could put a line through the middle of this. You know, you don't really want to see this coming down kind of more than halfway. If it does, it's probably coming down to the second lower bound. So this is kind of, you kind of want to see, you know, support levels in this first kind of half. I don't see any there. So I'd like to ideally see this come down, start to make its own support. In other words, it comes into here, it attempts to rally, you know, like this, and then it starts to trade into the low again. And that's where we can start to look for, you know, double bottoms. So that's a setup I'm going to be looking at next week, back inside the range, especially if we get these moves before Thursday and Wednesday. These pairs are likely to hold their ranges before those interest rate decisions. The second thing is if we come all the way down to 0.88957, which would almost certainly be on a weak outcome for FOMC. So, you know, this is very, 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 very unlikely going to happen before FOMC. If anything, this market will chop around and do nothing. But if we do end up after FOMC down at 0.88957, I will look down below here, especially if we blast straight through the first level, you know, on a very weak outcome from FOMC and trade into here, I will be looking for a 1 or 2 day reversal for this larger range to hold. And the third and final thing is, you know, on FOMC, let's say the market does nothing, and then on FOMC you get a bullish response. So we've gone through the bearish response, the kind of neutral response, you get a bullish response. Then you can look for that follow through trade. Usually you get a rally on the interest rate decision itself, the market pulls back, and then it rallies again. So you can look for that bull flag setup into, in this case, profit taking target at 0.91422. Next is New Zealand dollar. Now, New Zealand dollar got a bit of a bounce from the Trump comments, but it's still in a massive downtrend. This really is just a kind of short-term correction by the looks of it. So what I want to see primarily is I want to see this continue higher. I want to see it take out the 0.57848, and there's a really nice high over here. There's another high kind of halfway between. Maybe we push up there, you know, especially if we get FOMC first. But before FOMC, if we can take this out kind of Monday or Tuesday, this is going to be a great place to start to look for a failure above this high and look for the market to reverse back inside the range, especially before Wednesday. If we end up coming all the way to the 0.5858, this will be because we've had a very bearish outcome from FOMC. So in that scenario, you know, kind of neutral or before FOMC scenario here, this is what I'll be looking at. And again, we're making a game plan so we can reactively trade. We can kind of have 3 different plans, and then depending on the outcome, we can just pull from that folder and say, okay, this is the setup in this situation, right? So the second thing I'll be looking at is if we do have a very weak outcome, I will be looking at a potential reversal from above the 0.5858. And the third and final thing is if you have a very strong outcome and the market does nothing into FOMC, and then bang, you get this big sell-off, okay, because you get a rally in the dollar. The dollar starts to consolidate. That is New Zealand dollar pushing into its moving average, and then it sells off. In this case, don't really want to be looking for much further than the 0.56372. Maybe it comes down to here if it's very, very, very bullish for the dollar. With a catalyst, it's possible. But generally speaking, once you start to trade into this area, this is a great profit-taking area for any intra-week shorts in New Zealand dollar. And the final dollar pair here is pound dollar. Now, pound dollar was one of the top shorts I was looking at last week. In fact, this move down here, 1, 2, 3, 4 candles, so 16 hours of sell-off down here was from the upper bound last week. I actually shorted this. This was one of the setups I posted to members. In fact, it was the best trade from last week. Now, going into this week, take note of this because this is exactly the same setup that I'll be looking for. I'm going to be looking primarily, especially before FOMC, if we can push up, take out the 1.26192. And we don't really have, I mean, there is a high here. It would be nice if these highs were kind of just above it, that would be good. But if we do breach this and we start to, especially if we take out this high, but just bear in mind that these are here. So we might actually struggle at these highs. You know, we push through those highs, we tag the upper bound, and then we start to fail below these highs. You know, very, very feasible that that happens. That's the kind of setup I'll be looking for a 1 or 2 day reversal. Again, look at that 16 hours straight down. That was exactly the setup from last week. And I'll be looking at that again, not just in pound dollar, but other markets we're looking at as well. The second thing is if we break all the way through and we take out the 1.27575, this is the second place I'll be looking for a 1 or 2 day reversal. And again, that would be on a weakening of the dollar post FOMC. So probably won't happen. But if we did get there, that would be what I'd be looking at reactively. And the third thing is if you get a stronger dollar, you start to push up and you get the break down below the moving average on FOMC, and this market just chops around into FOMC, you can look for the follow through trade back into the moving average and away down below the 1.23428. Great profit taking target to the downside in pound dollar next week. Okay, so wrapping up the Forex universe before moving on to gold and silver with the yen pairs. We did get that rate hike out of BOJ. We didn't really see too much from the yen, to be honest with you. However, relatively speaking, I do favor it to the long side versus, especially some of the weak currencies like the Swiss franc next week. So I'd like to see the Swiss franc continue to make some ground to the upside. And if we get through the 174.09, this is where we enter the sell zone. This is where I'm going to start to drop down. I'm going to look to the left. If we take this out, that would be great. It's kind of halfway, but that would be a nice setup. Take this out, trade into this high, and then start to see momentum fading. That's the kind of setup, very much like we just saw in pound dollar sell-off last week, that I'll be looking at for, again, 1 to 2 days, 16 hours it was in pound dollar. But it can be, even more than that, 2 or 3 days. So that's what I'm going to be looking for primarily next week. If we end up taking out the prior high and also the 176.02, this is not expected to happen. This is actually a major trend change, and actually that would be pretty significant for the BOJ, right? They just hiked, and you're going to see the yen continue its downtrend, essentially, franc yen taking out its highs. This would be the second place though, because if I do short it here and it takes out the highs, what are you going to do? You have to have some kind of risk management process. So if it takes this out, I would be looking to add again, and any kind of pullback, short pullback here, I would be booking either a small loss or a break even. Again, that is a technique that I use pretty much every single week. And the third and final thing is if we start to push towards the upper bound and maybe we don't make it, we start to see the buyers coming in next week for the Japanese yen, you break back down below the moving average. The moving average follows it, and that sets up your bear flag setup. First pullback down to the prior low. Really nice when we have a prior low sitting right at the lower bound here, like we do at the 170.22 in franc yen to the downside next week. Next is New Zealand yen. I can either short it or do nothing. Buying this market is not an option for me. I want to see it come up and take out the 90.37. This is where we enter the sell zone next week. And some of these zones look bigger than others. Don't worry, it just depends on how you're kind of scrolling in and out of the charts. But this is the range for the week. We could very easily come up to the first upper or lower bound, down to the first lower bound. Usually you need a catalyst, and even last week, did we take out second upper and lower bounds with the BOJ? No. In fact, we only just took out the first upper bound last week in some of the yen pairs, even with the BOJ. So it just goes to show you, even with a catalyst, you don't always come up to it. It's very, very rare. But if we do take out the 90.37, this is where I'm going to be looking to the left for some prior highs, looking to trade into some resistance, looking for momentum to fade, and then looking for the bulls to liquidate for a 1 or 2 day reversal, just as we saw with pound dollar. If we push all the way through and we take out the 91.69, although it's not expected, it's good to have a backup plan, and this would be the second place. If I'm already short, I'd be looking for a 1 or 2 day reversal. If I'm not, and we take this out, great initial position, because you have a much higher chance of reversing here than you do here. The third and final thing I'd look for is if you get that breakout intra-week, you start to see the buyers coming into the Japanese yen after the rate hike on Friday. Look for the pullback, first pullback into, breaks below it, pulls back, moves away. Look for that bear flag set up down to, in this case, the lower bound at the 87.72. And last but not least, we have pound yen. So again, I can either be short or do nothing. Cannot buy this market next week. We're already starting to make our way higher. And again, you can see this was this whipsaw. We came down, we had the BOJ, we sold off, and then we rallied. And we started to actually weaken in the Japanese yen again, because this is why you're seeing pound yen moving to the upside, right? Because the Japanese yen is weakening. So if we get this continued weakening of the yen, I'm going to take the other side of that. If we can break through the 197.35, especially if we can take out this high, that's where I'm going to say, no, this is too far this week. All the odds are now against this market moving any higher, because the pound is not particularly strong. The yen is actually relatively stronger. We've got the bullish catalyst. We also are in the sell zone where the odds move against the market for continuing higher. And now we're into a resistance. The odds just stack up for a 1 or 2 day reversal with a high degree of probability. So this is where I'm going to be looking for 1 or 2 day reversal next week in pound yen. If we do blast all the way through to the 200 again, that would be a significant signal for the BOJ. There would be not something they would want to see. If it were to happen, as unlikely as it seems, this would be the second place I'd be looking for 1 or 2 day reversal, as always. And a third and final thing is, if you get the reversal, which is also very possible, you come up, maybe you double top, trade into here, and then you break back down midweek. That's very likely scenario next week. You get that first pullback into the moving average, pulls away, and there's your nice bear flag set up into the 192.06 for those of you who like to trade intra-week between the levels. Okay, so wrapping up the video with gold and silver as always, and coming into this week, it's very difficult to have an overall bias on the dollar. I do have a bullish bias in general, and this is because, you know, generally speaking, yes, they're going to cut rates. Trump does want it lower, but we are starting to see the commodities breaking out, the inflationary commodities, which is supportive of the dollar, bond yields, everything else. So on balance, I still have a bullish bias on the dollar, but it's not strong enough this week to make me want to short gold. So coming into this week, I actually have a bullish bias on gold. In other words, I will take long opportunities in gold if we get them. And I'm going to have a bearish bias in silver. So if we get bearish opportunities in silver, instead of, you know, if they both move to their upper bounds, I'm not going to short gold, I'll short silver. If they both move to their lower bounds, I'm not going to buy silver, I'll buy gold. So that's how I'm looking to play gold and silver this week. And what I'd like to see is I'd like to see gold pull back, take out the 2730.78. And this week, for really one of the first weeks in a while, I do actually like gold as a setup. We look at it every single week. It's not always ideal, but you know, you can kind of pull a short here or a long here. But coming into this week, you know, I prefer to be on the long side of gold generally anyway. But you can see we have two prior highs right below the lower bound. So we enter the sell zone and we're going to stair step right into these prior highs. If we get that, this is definitely going to be a place I'm going to be interested in looking for a 1 or 2 day reversal to the upside in gold. If we liquidate through there and we take out the 2690.31, we also have a nice support right here as well. This would be the second place I'd be looking for a 1 or 2 day reversal. We would have to have an extremely, I mean, even on extremely bullish outcome from FOMC, I don't think pushes gold to its lower bound. So you'd have to have some kind of gold specific catalyst. A strong dollar is not going to be enough, in my opinion, to drive it all the way down. So I don't expect this to happen at all, but if it does, good to be prepared. And the third and final thing is you can look for that pullback below the moving average and then look for the re-break. That's how you know you've had a correction and you're starting to get momentum in the other direction. And then that first pullback into the moving average for that bull flag setup through the prior highs and into the 2811.71. And last but not least, we have silver. Now, I can only be short or do nothing in silver next week. If we do move to the, you know, ideally I would like to buy gold. Out of these two setups, I'd rather buy gold than short silver. But if we do move up, take out the 31.60, I will look. I'll look at it and I'll say, and in fact, we've got the same setup we've had pretty much for 3 weeks in a row. In other words, the double top confirmation point where we break out down below here, we liquidate. That's how you know that this double top is confirmed. Look at the liquidation, the momentum. Look at the sellers pulling their positions. Oh, sorry, the buyers pulling their positions. So they're selling, right? The buyers step in, pushing this up. They buy it on the dip. They try to make a new high. They see it reverse from the high. They say, oh, I might have made a mistake here. I'm going to sell my long position. And then more sellers step in on the break and you get this liquidation. So you can see we've had that confirmed double top. And now if we come back and retest the underside, we trade right into the upper bound. So this would be a good place to start to look for a 1 or 2 day reversal to the downside. It's been like this for 3 weeks. That tells me, without even going back and looking for the last 3 weeks, silver's done nothing. Right, it hasn't moved because these ranges haven't moved, and the ranges, you know, will track the price. So, in terms of, you know, is this the best opportunity? No, I prefer the Forex opportunities and the yen pairs as well, where we don't have the interest rate decisions. But if we blast through here, so whether I'm short already or not, and if we take out the 32.60, this would be the second place. I'd be looking for a 1 or 2 day reversal, especially if we take out, say, this high. And the third and final thing is, I'll just clear this off quickly so we can see this a bit more clearly, is if we start to make our way up towards the upper bound and instead you get a stronger dollar. So you start to see maybe post FOMC on Wednesday, you see silver continue to do nothing, you get a stronger dollar for whatever reason, and then you see silver sell off, and that's when you get that pullback and not cross it. You don't want to see it cross it. You want to see it come in and just kind of hug it like this. That's the opportunity to look for that bear flag setup, in this case down to the prior low here, and the 29.60 is the bottom of the range next week. Great profit taking area in silver for any intra-week shorts next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting edge Hedge Dash platform is included with every GMT membership.